What are tax-free ways to transfer wealth to heirs? Imagine passing on your assets without the government taking a big chunk. Sounds good, right? There are several ways to do this legally and efficiently. Let's walk through some of the most common methods. First, you can give gifts directly to your loved ones. Each year, you can give up to $19,000 to each person without paying gift taxes. If you are married, you and your spouse can split gifts and give up to $38,000 to each person tax-free. These gifts reduce your overall estate, making it easier to pass on wealth without taxes. Next, there is a large exemption called the Lifetime Gift and Estate Tax Exemption. In 2025, this exemption is around $13,990,000 per person. This means you can transfer a lot of wealth during your lifetime or after death without paying federal estate taxes. But remember, once you use up this exemption, it's gone unless laws change. Another way to transfer wealth tax-free is through irrevocable trusts. These are legal arrangements where you transfer assets into a trust that cannot be changed later. For example, a Grantor Retained Annuity Trust allows you to transfer assets out of your estate while still receiving payments during your lifetime. These trusts can help shelter assets from estate taxes and pass wealth smoothly to heirs. Life insurance policies are also useful. If you buy a policy and name your heirs as beneficiaries, the proceeds are generally income tax-free. Using an irrevocable life insurance trust keeps the policy out of your taxable estate, which helps reduce estate taxes. Converting traditional retirement accounts like IRAs or 401ks into Roth accounts is another strategy. You pay taxes now, but your heirs can withdraw the money tax-free later. This can be especially helpful if you expect tax rates to rise in the future. When you inherit assets like stocks or property, they often get a step-up in basis. This means their value is reset to the market value at the time of your loved one's death. If you sell them later, you may pay less in capital gains taxes. But recent laws might change this benefit, so it's good to stay informed. You can also use transfer-on-death deeds for real estate or beneficiary designations on bank accounts and retirement plans. These options allow assets to pass directly to heirs without going through probate, saving time and money. Family-limited partnerships are another tool. They let family members own shares in a business or assets, often at a discounted value. This reduces the size of your estate and makes transferring wealth easier. Finally, paying directly for your heirs' education or medical expenses is a tax-free way to help them. These payments are not subject to gift taxes if made directly to institutions. Combining these methods with a solid estate plan, including wills and trusts, can help you avoid probate delays and minimize taxes. It's always best to work with an estate planning attorney to tailor these strategies to your situation and current laws.